Chapters. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman. Yeah, this is the Tuesday edition, the 20th of September. Tiger Technicians Hour. We're looking at the Dow down 358 at 30,660. Looking at the S&P, also down very sharply. Down. Oops, I typed it in the wrong place. Down. There it is. Down 43. Actually 44 at 38.55. Looking at the QQQ, I've got a lot to discuss today, so let's just get this going here. Down 2 at 289. Actually, the Qs over the last three sessions, as we're speaking here at 10:07 a.m. Eastern Time on Tuesday, a green candle, even though it's down, had a green candle on Friday, had a green candle on Monday, big green candle. And so far it's green. That doesn't mean anything. The day is young, 36 minutes into the trading day. Looking at the IWM, the Russell 2000, down 2.56 at 177.99. This is going to be very important because if gold, and gold right now is down almost 6 at 1672, these three bars looks very much like the equity market, these three candles from Friday, Monday, and today. If gold is not able to pounce into the 1690s, 1710 area by Friday, but instead starts to close, not just break down, but close under 1650, I would suggest that within the context of the pattern itself, the monthly pattern that went from a U-shaped pattern with a double top test, failed, and then took out the left side low, that gold becomes quite vulnerable. And that I have to put that into context because yesterday silver was acting so well. A big red candle today, but at this time yesterday, silver was spiking higher. Now it's down 17 cents at 19.18. Can't go by itself. Gold and silver have to go in unison, even if there's some kind of a lag. I want to put this together with the dollar, actually, and this is prior to the Fed speak tomorrow at 2 o'clock, 2 to 2:30, up 62 ticks at 110.25. Look at the way the green 9-period exponential moving average, way above the black 14-period moving average. Look at the way the price is just walking the 9, not even the 14, although today did test it. Is basically walking the 9-period exponential moving average. The MACD is so-so. It's kind of a little weak. Stochastic's very weak at 66%. The 9 is over the 14-period moving average. That is absolutely key as far as I'm concerned. And look at the weekly chart. So the dollar, unless something, what is today? This is the 20th. So let's go to, let me look at the calendar. So October. Let's go to all the way through the week of the 7th. The first full trading week. Yep, the first full trading week of October. If the dollar has held and is not under 107, but is held above 109, but is actually in the interim period between now and that day, that's 2 weeks. Is that 2 weeks from Friday? Let me just double check. Today, it's the 20th, so that'll be 19th. We've already used up, okay, so 23, 30th. Yes, it's about 3 weeks' time. If the dollar is actually pushed into the 111.80, 112.20 area, that's going to be very impactful because you've got this potential for the double top at 110.79. That was the high of about the 6th or so of September. But if it breaks above it, that goes to a leg F in the weekly chart, and it extends leg C in the monthly chart. So this is very important. Let's put it together with the euro, because look at the euro. The euro right now is in the lower range, very, very low range. In fact, in the yearly chart, it's at the lower range of the yearly chart. It had once upon a time, I don't ever type this in because it gets smoothed out and then you've got all these numbers that just don't fit like the letters. I have to always put them vertically higher or vertically lower. I don't change the name, the alphabetical name, or in this case, that's a peak B minus. It fell right there at the high of 2021. That was January of 2021 at 1.2349. And here we are at 0.99. Ugh, this is quite something. Look at the USD JPY. This is the yen holding, but it's not breaking out. It's just holding within the rectangle formation. So let me draw this because it's very important. You got the within the rectangle formation. I did a left side, right side price time vertical test. There it goes. There. And within that context, you've got a U-shaped pattern, right? Let me expand this. You've got one U-shaped pattern right there. And then you've got another one trying to form right here. This is just a little mini one. It's not even a U-shaped pattern yet. So the US dollar Japanese yen currency pair holding near the multi-year high. Not only is it doing that, but it's walking the 9-period moving average just like the dollar is. So within this context, all I can say is that what the Fed does tomorrow, what they say is going to be very important, because if you're looking at the TLT, this is just horrendous. Here's your leg D, leg G in the weekly chart, leg D in the daily. So if it's a leg G in the weekly, we have to consider that it's an alternate count, so it's G/C. All right, so that's a G/C. And all the technicals that suggested there was a chance, just a chance, that here we go, C, that the MACD was holding well. The stochastic was doing, at that point, was doing a little bit better than the left side low that was made back in June. That's all failing right now, and you've got yourself a dreaded H pattern with a peak B minus in the weekly chart of the TLT. I don't know if that's already there. There's the H pattern, and you've gone to a lower low, and you've gone to a leg D. Now, this is, for me, going to be very important because, you know, there's a particular pattern that I've discovered years and years and years and years ago, and it has to do with trend lines. And those trend lines became channel lines. And then the channel lines became very narrow, inside track, repellent, propellant lines. So here we are. We've got this in the monthly chart of there we go. This is the TLT, Lehman 20-year Treasury Bond Fund. And we're just getting to the upper trend line. And that says all the way down to at 105.85. You can go all the way down to 98 point. Yeah, let's call it 98. Could still be within some direction. So I don't know what it's saying other than yields. I don't know what the Fed's going to say, but yields have really extended to the upside. Basil Chapman, Dow's down 388. We'll be back in a moment. Just a quick look at our E chart. I think we're getting some kind of a bounce attempt. Yep, there it is. All right there. I'll be back.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, Basil Chapman here. So we're talking about the TLT, which is just slumped down to a leg D at 105.70. And that is in the weekly chart. You've got your dreaded H. We're now way below the left side low. And you've got a leg D in the monthly chart. So what we are looking at here is within the context of, where are we? So for subscribers to my opening call, we've once again raised a really big pile of cash. Got stopped out of long positions for either nice gains or very, very small losses. But we are not messing around. We absolutely, I think conserving cash is absolutely imperative. If there is a huge turnaround in the market, you can always be coming in. Even if you miss the low, it doesn't matter. We are still short the Dow, around about 30,300 level. But on a very, very near-term trade, we did buy the diamonds this morning. And with a 1% stop, 1% on a $308 stock, that's really cutting it fine. But the reason being is if there is some kind of support today and towards the close, I don't know what will do that. It happened yesterday. I think we've used up that energy to the upside. But if there is some kind of a little bit of a rebound, whatever the Fed does gives us a little bit of a cushion. If it's negative, whatever, I don't know what they can say to be really positive, but they can say something that at least ameliorates short-term the selling so that people say, well, we've already done a lot of the selling. Let's see what looks like it could have a bounce. That's the way I'd be looking at it. And that's all. So within that context, we have very few long positions, still, of course, long the dollar from 89 way back 2018. But market-wise, very, very cautious. And the reason for being cautious is when I looked at even the stocks that I thought had some strength, the fact that they were testing lows and then taking them out recently and then trying to restart suggests that it's going to have to be a market participation that essentially holds up some kind of rally that purports to at least alleviate some of the pressure from the bonds. I don't know how they can do that, but especially what did the home builders? I think there was an earnings. I think the earnings reports were actually quite good today. That maybe will be completely reversed on the next report, but these things worry the Fed. They worry the Fed. So yes, we're about to get some kind of a little bit of a turn in the general market. Here's the E-mini 1 minute chart. I think it's starting to rally a tad. Yep, peak A right there. Oh, whoa. Actually made a leg B. We'll see if that can hold. This one here failed A and then went to a B minus. The other A was a A minus. So it just keeps fading. It's a real struggle. I don't really see what could, unless there's some kind of anticipation in the report that the market says, yeah, we can start to overlook that at least for a week or two. All right, let's get back to our story. So, and the Dan says ADN is, yep, look at that chart. Oh, I hate this. This is just terrible. Advent Technology. Oh, Advent. You remember there used to be a radio, a speaker company here in Massachusetts, I think here in the Boston area. In fact, might even have been right here in Newton. Advent. When I was Cambridge. And really good speakers they used to make. I wonder if I've still got one of them lying around. Anyway, so that's Advent, but this is something else. This is Advent Technology trading at $4.06, up 3 cents. Very nice. Above the 200-period moving average. That looks very good. This is Advent Technology. I don't know if they do. Oh, hydrogen fuel cells. Oh, I'm going to put that in because I've got a special list now. I'm making up all these different esoterics. So this is hydro. Let me just put that. Okay, good. So this is in favor right now. It's got a rectangle formation. It should try to make its work its way up to the 450. I think it's just under 450 right there. The week of June there we go. Hello, anybody home? Why is it not coming up? There it is. June the 17th at 4.48. And it's trading right now at 4.07. Hey, that's 10% higher. Yeah, it's acting very well. It looks a little extended on the daily chart, so I wouldn't be surprised 382 to 373 if it has to be tested over the next week or so. I'd say the next few days, and then try to go higher. Next thing we want to look at here is, a couple of questions. So, yes, I had written these down, and I thought I'd do that today. Let's just go through these. Adobe down huge. They just gapped down, and then it continued down. Yeah, stocks that gap down I've always had it as a few days that you've got to watch it really closely. I know Dave White, after I'd been talking about it for a while, I saw that Dave White calls it his 3-day rule. I agree. This is exactly what I like, is a 3-day rule in this particular instance of a gap down or a gap up. And basically what it says is if you don't get into the gap, in this case, the gap high above 320, there it is, above everything's a little slow, above 329, round number high on the 19th when it gapped down from the previous day. The low was 365. That's a huge gap. But in fact, you take out the left side low and then close below it. That says the closing price is now extremely difficult. Its resistance, it might go a little bit above it, but it's going to be like a magnet. In this particular case, the closing price was 309.13. Well, for 3 days now, since then, it's made lower lows. And today it's gone to 287.81. It's trading right now 289.75. And this is a fantastic company. Adobe, cloud, digital commerce, and just, they're right in the were in the sweet spot, going to the 699.44 all-time high. And that was back in, I think it was in November or so of last year. I would say down from 699, let's call it 700, down to 289. It's a 58% decline. I would call that a severe decline. And this is a great company. I've followed it for a long time. I know that the company that my son had worked for was taken over by Adobe. He had already left for another company, which his responsibility was to get it to go public, which it did. And when I spoke to him the other day about this huge decline, he said, I love the company that they're taking over. We'll see what happens. So this is Adobe. All right, let's go to Apple. Apple is trading up 25 cents. They had a really good session yesterday and a green session today so far, but it's kind of stuck. I think Apple is one of the charts that we can talk about as holding extremely well in the monthly chart. The daily chart has taken quite a beating in the short. I'll be back in a moment. Dow's down.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. We're back, and you can see that the S&P is really working very hard. There's the E-mini trying to get to a leg D here. This is the first time it's actually gotten to a C in quite a while in the 1-minute chart. You can see that 120-minute chart, a lot of fib numbers that it's trying to test. This is very, very difficult, and you can understand why, because the context that we're in right now, economically, just market-wise, in the general spectrum of earnings reports, I think is it next week, in the next 10 days or so, we get a new bunch of earnings reports. This waiting is Will we be able to weather the storm that's coming up if the Fed says, and look, the TLT is doing its work for them. I mean, let's face it, look at this TLT and look at the TBT. The TBT is the mirror image of the TLT. It's in leg D. Remember the target I had was 29.56. It's trading at 30.05 right now. This is the right side of the cup formation. In a leg D in the ultra short Lehman 20-year Treasury bond ETF monthly chart. It's done an exact, I've done the measured move before. Remember, look at this. And now Larry's doing this right now in his all-day webinar. He's talking about the synchronicity of time. I call it this is, look at the left side, right side, price time action here. This is not a cup formation. This is like a W, but I chose this doji candle right here at 30.24. This is the candle of July of 2019. Where the high was 30.24, the low was 28.21, as some kind of a target to this particular midpoint right here. And that was the midpoint of, let's go to this one here. Oh, I should have moved that a little bit to the right. Oh, so it's a 1 month early. There you are. So there we are. We're looking at there it goes. So this is the high of, in a W formation, the midpoint, March of 2021, and we are now above that level, but the month has still got some time to go, so we'll see where it closes. The MACD is very strong. The 9 is way above the 14 in the monthly chart. The stochastic at 77% is good, but not great, but very good, considering that it's a monthly chart. On balance volumes a tad overbought. So it's saying that the bonds themselves have done a lot of work for the Fed. This is a leg D in the daily chart. And if you look at it on a purely technical basis, regardless of whether tomorrow there could be an announcement that makes a big difference to bonds or no difference at all, what I am looking at here is that the 9 period is way above the 14 period moving average, right? Right there. Remember, the doji plus sign looks like the candle today so far. That's not a plus. That is the candle itself. It's trading at 30.10, up 88 cents, gap up. And the MACD is good, but it's starting to flatten out a little bit, but it's still very good. 9 is way above the 14, was supported 29.07 on the 9 and 28.66 on the 14. The stochastic is good at 84%, and the on-balance volume is very strong. 9-period moving average, the RSI, Relative Strength Index, right there is running very nicely. It's at about 70% right now. That's very good. So if you put this together with, now I think I can do it. I didn't really want to do it. I did it over the weekend for subscribers. I'll do it now. I didn't want to do it because I wasn't sure whether or not my system right now would take it. I think it will. This is going to be 30-year. This is my triple yield chart. 30-year is white, TYX. The brown is the TNX, 10-year, and the 5-year, the CYC. Why did I suddenly forget that? This is the cyan, FVX, I believe it is. Yeah, FVX 5-year is the cyan-colored one, light blue, and you'll see that they are breaking to the upside even as we speak. Dow's down 403, and come on, don't be slow. That's what I was a little worried about. Yeah, it comes. I can feel it. Here it goes. 1, 2, 3. Triple yield chart. Remember, 3 charts. Hello, anybody home? Okay. Waiting. This is not good. Never takes this long, but I think there's a lot going on today, so we'll see it in a moment. So on the left, you'll see the triple yield charts making a big cup with a handle formation, and we're breaking out to the upside. The big thing for me now, what is the letter? Is the letter G, or is this a brand new A? Because you see, you've got your peak D, you got an instant restart, but you made lower lows. So there's did I forget to write that in yesterday after all that work I did? I must say that's one thing that's going on with this COVID. There's been just so much activity that I've been a little remiss in keeping up with writing down charts that are extremely interesting in the Chapman wave methodology. And what I want you to talk about, where is that? Okay. There, we've got that. Nope. Looking at that. All right, doesn't matter. I will find it. I always come across these charts again. So within the context of this peak G right, leg G right here, could there be an alternate count? I don't want to take too much time today talking about it. What I do want to talk about is, isn't this amazing how slow it is? And I've done this, what Dan in Connecticut had told me to do with TradeStation. So that must be helping some, but not obviously helping enough as it, because I'm still a little bit slow. So here we go. Look at the wood. The iShares Global Timber and Forestry ETF took out the 200-period moving average support. It's below that now. The high grade, the HGX Philadelphia Housing Index is weak, but it's not actually all that bad. It's down 9 at 369. If it starts to trade in the 363 area, that's going to say, that's serious. So within that context, what I am looking at here is that the yields are starting to have the impact that the Fed wanted. You can see it here by all these right-hand weekly charts with the iShares Global Timber and Forestry ETF and the Philadelphia Housing Index. So would the Fed have an impact on the global timber and forestry ETF? All I'm saying is that the weakness in the general market based on the higher yields is affecting our markets, and our markets are affecting European markets, and you can see that right there. All right, let's get out of this. There's a bunch of things I want to look at here. Why did I feel it's important to raise cash and get out of positions that were actually doing very well? One of the reasons is that in this particular market, we are starting to see over the last 2-3 weeks that even the correct call in a sector that is doing okay, but you want to pick the best stock in the sector, can impact that stock. Markets tend to do that, number one. Number two is, in a very good sector, the very best stocks hold extremely well. The problem is that almost every sector has now been affected negatively. That's just the way it is. You even had GIS. When does GIS, I believe, is, did I type it in right here? This is General Mills, if I can get it. There it is. General Mills, weekly chart going to a leg E. Holding pretty well considering the monthly chart high in the 78s. And here it is at 75, so that's not too bad. I'll finish up doing this chart as soon as I return. This is Basil Chapman. Target conditions are Dow's at 435, S&P's down 54. I'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi everyone, we're back. Basil Chapman, Tiger Technicians Hour on this Tuesday, the 20th of September. 78.54 was the high on the 24th of August for the GIS, General Mills. And then it starts to pull back. Now, this is fascinating because if you were short from that second session at the high at about, say, 78, you were correct. The MACD was pulling back, stochastic tumble from the over 80% into the 70% area. Price kept fading. And now this is going to be important because within the context of a technique that I developed years ago called the Chapman wave, rogue wave, well, it describes exactly what goes on. In this particular instance, if you were short GIS on the 1st of September, it had a high of 77.36 and a low of 75.75. But the next day, it had a sudden spike to the other, like a news-related spike. If that spike went instead of 78.40 where it stopped, if it went to just above 78.54, that would have fitted exactly the criteria for the rogue wave, which says, in a rogue wave, if you are short or you're looking at the sell side, you are correct. But there's that one moment, one news-related moment, where the price that you're following spikes up and it goes above the previous high, all-time high usually, and all those folks that were long-term long and then they got out of some of their position say, oh, I knew I should never have touched that. It's been a fantastic stock. It's the perfect stock in this environment. I don't know why. Even now they're using more words than they would normally do, because what they would do is they say, maybe I should get back into a little bit. And the price holds up above that high just long enough for them to re-enter positions that they had gotten out of. But at the same time, the shorts are now terrified because they were correct, but the price is held above the previous high. In this case, it didn't. I'm saying if it had, it would have been a perfect rogue wave, because what happens is the price loss above the previous high, it holds it just long enough for the shorts to say, I've got to cover. This could go anywhere, all-time highs, it could go anywhere. So they cover. And then the rule of thumb in the rogue wave is that the bar that takes out the previous high is also the bar that closes very often below where it was the day before, and then it just continues on its merry way to the downside. It traps everybody. It traps the bulls, it traps the bears. And now you've got fresh people in that are either still holding long positions or did hold short and are still holding short, and that's the good hands. And look what happens. It plummets all the way down to the 73s. I shouldn't say plummets. 5 points from the high is not a big deal. but it is a trend change in the daily chart, not so much on the weekly chart. Well, it didn't make a rogue wave because it didn't go. It went to 78.40, but I'm just saying, giving this a great example that if it had gone to 78.55 or higher and held there just a little bit like it did in this particular picture right here, and then tumbled, that would have been a perfect rogue wave. I like to always do a little technical analysis here for people interested in the Chapman wave methodology. And you can see now we're back into the down channel, even though there was the one spike, aberrational spike. And now I can draw in the green line for the outer boundary of the outer channel. But what I like to do is I draw in a new one right there, and you've got yourself Chapman wave inside track repellent zone. I don't really need it because I've got the 9-period moving average right there. I've got the pink 14-period, the 14-period moving average is black and the pink is the 9-period moving average. But this just clarifies. And it says if there is a close and then a hold over 2 sessions above 76.22, you've now broken out of that down channel, that little mini down channel that is, which is also part of the bigger down channel. All right, got that out the way. Question about Tesla. So this was also on my list, so let me just do it now. Tesla. Now, this is what I love to look at. Within the context of the EV sector, it seems even today that Tesla has been able to manage let's just call it the chip situation, very well. And you can see that in the chart. And what it's doing is it's got the pattern, the V-shaped pattern or the cup formation. It did a Chapman wave stalk leg formation that failed. And it pulled back. So I'm going to keep that oval pattern even though it's technically not the one that I would use. And I'm going to draw in the cup. And then I'm going to say to you, use the symmetry, bar symmetry that I love to use for left side, right side price time match. And look at the high that was made at peak E on the 16th of August at 314.57. And look where we are today at 310.50. So let's do this. We go here, make that green. And all of this is just it looks complicated, but look how quick I just did it. And you don't have to do all the tools that I've got. You can just say, so you could count the bars to the left side, say this is the low, put in a little trend line, vertical line there, and say, I'm going to measure that and just move it to the right. And today is the day that it should try for the high that was made on the 15th, or I think it was, I said the 15th. 16th of August at 314.67. So far, it's 6 points below. But isn't this interesting? It's walking the 9-period moving average. Look at all the green bars in Tesla. And it just says Tesla in the big picture might be having a big consolidation for 414.50 high of November down to the low of, what was it? The low 220? No, what was it? To the low of, there it is. To the low of May the 24th at 206.86. Let me just put that in, 206.86. Okay, 206.86. And I would say 414 to 206, you've had a 50% decline. But look at the rally from 206 going to the 319, 310 area where we are right now. That's a fabulous rally. So this is what I'm saying, that within the context of the markets, there are certain sectors that you might keep your eye on, but it's the stocks within the sector, or the stock in this case, that is the highlight of the sector. And definitely Tesla is the one I can't believe when I drive around. You remember I used to count the Teslas. I say, oh yeah, in Newton where I live, Newton, Mass, the Garden City, I drove a mile and a half and I saw 3 or 5 Teslas. And then I made the point to say, this is the first time I can recall a really top of the line, very expensive automobile having this number of women drivers. Yes, you saw that in BMW, but it took a long time. But it hasn't taken as long in the Teslas for women to say, hey, I've earned it, I deserve it, I'm driving it. And I haven't spoken to any woman who drives a Tesla, but I'm sure that they're really enjoying driving. It's a fun car to drive. So you can see that it's a very popular car, and you can see that it's doing very well. So it's up today, $1.74. How does it break 320 in the next week? It does it break 300. I'll be back. That was at 355.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. Talking about EVs, question came in today. Could I show the chart of Rivian, RIVN, trading at 38.11, up 19 cents. So I like to always measure in a cup formation what happens on the left side to the right side, especially if it's a little doji candle. What has happened is that the highs that were made around about the 14th or 15th of August in leg F and then a peak F in the 40 area, we're looking at the technicals kind of mixed right now, but in essence holding very well. So if you're looking at Rivian on a monthly basis, this is a stock that comes out as an IPO about, 8 months? It was this year, wasn't it? No, it was last year, November. Comes out, opens at 106.75, no round numbers, 95.20 low, 179.47 high, oh my goodness, there. I don't know what to tell you. There are so many people that have bought stocks in 2021, at incredible highs, to see them come down 50, 80%, in some cases 90% even. 179.47. Let me just put that in here. 47, that was 11, 2021. Comes down, there's a little bit of a decline, drops to 24. I would say that is definitely something noticeable. You've gone from 179.49 to 24.48, July the 5th. Wow, 24.48, 7, 5, 22. So, fabulous rally. 24, almost doubles to 40, 41. Oh, is that the end of the show? Oh, hey, everybody, this is the end of the show. I'll be back with Tom a little later in the day. Stay tuned. Great program coming up. Steve Rhodes, check out my opening call. And we're going to see where we close today, going into tomorrow's close. That's going to be really important. Have a wonderful rest of the day. And it's good to be at least having the voice go almost all the way through for the hour.